Bitcoin is on the brink of an unprecedented supply shock. ETFs are locking up millions of BTC, exchange reserves are depleting, and nations may soon join the race to accumulate strategic Bitcoin reserves. In this video, we'll take a deep dive into why demand is skyrocketing, how supply is shrinking, and what it all means for Bitcoin's future price. This is a must-watch for anyone in the crypto space. Bitcoin, a digital asset built on scarcity, with a hard cap of just 21 million coins. But what happens when that scarcity becomes real? When demand soars and supply dries up? Today, we're talking about Bitcoin's looming supply crisis, how we got here, and what it means for the future of this revolutionary asset. ETFs are absorbing Bitcoin. Let's start with ETFs. These investment vehicles opened the floodgates for institutional money to flow into Bitcoin. In 2024 alone, Bitcoin ETFs locked up 1.5 million BTC. That's 7% of the total Bitcoin supply, gone in just 1 year. And this is just the beginning. As more ETFs launch in markets worldwide, the appetite for Bitcoin is expected to grow. Imagine demand in 2025, exceeding this year's numbers. Where will the supply come from? Shrinking exchange reserves. Now, let's talk about where Bitcoin currently sits. Exchanges. Today, only about 1 million BTC are available on major crypto exchanges. This is the liquid supply, the BTC that's actively traded in exchanges. Compare that to the 1.5 million BTC ETFs absorbed this year. If ETFs and institutions continue accumulating at this rate, exchange reserves will be drained in no time. As reserves shrink, Bitcoin becomes harder to buy, leading to increased scarcity and, inevitably, higher prices. And mining can't keep up. What about mining? Surely miners can meet the growing demand, right? Not exactly. Bitcoin's supply is capped at 21 million coins, and over 19.45 million BTC have already been mined. That leaves just 1.5 million BTC left. But here's the catch. These coins will enter the market slowly over the next 100 years, thanks to Bitcoin's halving cycle. In 2024, the mining reward will be halved from 6.25 BTC to 3.125 BTC per block. This means new Bitcoin will trickle into circulation even slower. And here's where things get even more interesting. Some nations are now considering strategic Bitcoin reserves, much like gold. Imagine governments competing to acquire Bitcoin as a hedge against inflation and geopolitical risk. This could trigger a global race for the remaining supply. If nations enter the fray alongside ETFs and institutions, the available Bitcoin will vanish even faster. So, what happens when demand outpaces supply this dramatically? First, prices will surge. As competition for Bitcoin heats up, buyers will be forced to pay higher prices to secure their share. Second, we could see increased volatility. With less Bitcoin available for trading, even small market movements could have an outsized impact on price. And third, Bitcoin could solidify its role as digital gold, becoming the ultimate store of value for both institutions and nations. So let's recap. ETFs absorbed 1.5 million BTC in 2024, and demand is only growing. Exchange reserves have shrunk to just $1 million BTC. Mining can't keep up, with only 1.55 million BTC left to be mined. Nations may soon compete for Bitcoin, further reducing supply. The result? A looming supply shock that could push Bitcoin to heights we've never seen before. If you're holding Bitcoin, you're part of a shrinking club. If you're not, time might be running out. What do you think? Are we heading for a global Bitcoin supply shock? Drop your thoughts in the comments, and don't forget to like, subscribe, and share this video to spread the word. Thanks for watching, and I'll see you in the next one.